Quick heads up, I am not a financial advisor. This video is not financial advice, it's more like financial entertainment. You know, the kind that makes you laugh, then panic, then laugh again. So don't sell your house or tattoo Bitcoin on your forehead just because of something I say here. Always do your own research and maybe call an actual financial professional, preferably one who doesn't film YouTube videos in their pajamas. Hey there, beautiful people of the internet. Buckle up because the Federal Reserve just did the financial equivalent of texting their ex at 2 a.m. They cut interest rates. Yep, the most powerful money printer in the world decided to take a break from pretending inflation isn't a thing, and now the entire global economy is basically doing the cha-cha on a minefield. Stocks, housing, the US dollar, even your grandma's retirement fund. Everything's about to feel it. And today, I'm going to explain why this matters, what's hiding behind the headlines, and most importantly, how you can avoid being financially pants down when the music stops. Oh, and I promise to sprinkle in a little humor so you don't cry yourself to sleep after this video. Deal? So a few hours ago, Jerome Powell, aka the world's most stressed babysitter, cut rates by 25 basis points. This is the first cut since the Fed finished the most restrictive tightening cycle in history. Translation, they squeezed the economy so hard that even Elon's rocket fuel looked cheap, and now they're finally loosening up. Why? Officially, the job market. Unemployment is creeping toward 4.5%. Revised job numbers fell off a cliff, and for the first time in 4 years, America has more unemployed people than job openings. That's worse than your Tinder match ratio. Unofficially, the U.S. debt payments are ballooning past $1.3 trillion a year, and Uncle Sam needs a cheaper credit card. Cutting rates is like refinancing your debt, except instead of a car loan, it's the largest pile of IOUs in human history. Now, everyone knows the Fed has two main goals: fight inflation and support jobs. Cute, but there's a third, secret menu mandate, like the In-N-Out burger of central banking, and it's to keep long-term interest rates moderate. And this is where things get juicy, because when the Fed can't keep those 10-year Treasury yields under control, the entire economy starts playing Jenga. Mortgages, business loans, government debt, everything stacks on top of those yields. If they spike to 9% or more, congratulations, we're all broke. If they fall to 2%, cheap credit flows like tequila shots at a Vegas wedding. How does the Fed control this? Balance sheet sorcery. They buy government debt with fresh dollars, push yields down, and voila, the economy looks stable until you realize they just printed your purchasing power into oblivion, which, by the way, is why Bitcoin was invented. It's like the rebellious teenager of finance flipping the bird at central banks. Here's the circus act. Short-term rates are falling because Powell says so, but long-term rates, that's up to the market. Investors aren't convinced inflation is dead. In fact, last time rates were cut, 10-year yields actually went up because Wall Street thought, oh great, more money printing, more inflation, pass the Advil. So while CNBC cheers, rate cuts, yay, stocks to the moon, the bond market is basically side-eyeing like, buddy, we've seen this movie before, and spoiler, it doesn't end well. Let's talk real life. Housing prices, already wobbling. People who locked in 3% mortgages are living rent-free in the land of smugness, while new buyers are stuck paying 7% for the same house. That's not a market, that's a bad joke. Stocks? Concentrated like orange juice from the 90s, 10 companies make up 40% of the S&P 500. Nvidia alone is basically the Beyoncé of Wall Street right now, and when one stock becomes that dominant, history says buckle up. As for the dollar, Moody's downgraded the U.S. outlook. By 2035, interest payments could eat 30% of the federal budget. Imagine spending a third of your paycheck just paying Visa back and still ordering Uber Eats every night. That's America. So what do you do with all this doom, gloom, and financial comedy? Diversify. Hard assets like gold, real estate, and yes, Bitcoin are insurance against governments who treat money like monopoly cash, because here's the truth. Every time the Fed cuts rates to save the economy, they're also quietly taxing your savings through inflation. It's not robbery if you call it monetary policy, right? So smash that like button. It's free, it tells the algorithm I'm not screaming into the void, and it gets this video out to more people who need to hear it. 1 like equals 10 more views. That's the best ROI you'll find today. Drop a comment too. Tell me if you think Powell's playing 4D chess or just whack-a-mole with the economy. And hey, if this all feels overwhelming, just remember, somewhere out there a guy just spent $200,000 on a picture of a monkey JPEG. You're already doing better than that. See you in the next video.